What's up, my real estate family? This is Norbert. Mortgage rates gave back some of their gains that we saw the first week of August, but we're still 1% lower than where they were on June 1st. According to the Mortgage Bankers Association, mortgage applications increased by 16.8% last week with the lower rates that we've been seeing. You can see from this Fannie Mae Freddie Mac bond chart here below that bond prices have been in a nice upward channel, moving up ever since June 1st. Then on Monday last week, we hit a bump in the road and gave back some pricing. Keep in mind that the higher the price is of these Fannie Mae Freddie Mac mortgage bonds, the higher they are, the lower interest rates drop. They literally have an inverse relationship to one another. So what happened this week in the bond market? Well, on Wednesday, we got to look at inflation via the Consumer Price Index report. Remember, this measures inflation at the consumer level. For the first time in a long time, the headline year-over-year number was below 3%. Headline inflation was at 2.9% in July, and the core number, which strips out food and energy costs, came in at 3.2% year-over-year. Both of these were better than what the markets were expecting, and this was great for interest rates. And you can see that rates dropped that day. But then on Thursday, we got slapped in the face with the July retail sales number. The report showed that retail sales rose by 1% in July instead of the 0.3% that the market was pricing in. Higher retail sales is bad for mortgage rates because higher spending promotes higher prices. And higher prices, of course, is inflationary. And remember, keep in mind, inflation is literally like the arch enemy of mortgage interest rates. So where did rates end up week ending August 16th? Conventional 30-year fixed rate was sitting at 6.5% with borrowers paying approximately 1 1/8 in discount points to get that rate. That's an APR of 6.651%. The 30-year FHA rate was at 5.75%. That's an APR of 6.62%, and borrowers were paying approximately 1% to get that rate in discount points. These, of course, are based on best case scenarios, which I describe as someone buying a single family home as their primary residence with a 760 or greater FICO score and a 20% down payment. Your specific situation may differ, so make sure that your clients contact a mortgage pro like myself to get an accurate rate quote based on their specific criteria. As always, really appreciate you watching my video. Thank you. If you haven't already subscribed to my channel, you should. Just do it. Click the button and subscribe. And as always, let's get better, let's close more deals, and I'll see you in the next video. Bye now.